Well, speaking of hot money, that's probably a good segue to a part of the corporate market that I'm sure is capturing a lot of attention and dollars, which is this AI infrastructure build out. Because we've spoken about it a lot as an equity story, but more and more it seems to also be a credit and debt story, as a lot of the big tech players and the like tap debt markets to continue to fund their infrastructure build out. So give us a sense of what it's like on the ground here in Australia, but also globally. How is this AI infrastructure story affecting credit markets?
It's a very topical question.
Yeah.
I'm glad you raised it. So it really depends on who you ask, right? But the AI capital expenditure boom is probably the largest investment boom of our generation. And there was a recent JP Morgan report that came out and said that companies need to spend about $5 trillion over the next 5 years to build out, the infrastructure that goes along with the AI boom. You can pick up consultant reports where that number is not 5 trillion, it's 7 trillion or it's 8 trillion, right? But the simple message is it's a large number. And if you take 5 trillion at face value for a minute, roughly speaking, in some estimates, 30% or roughly 1.5 trillion of that 5 trillion will need to be funded by the corporate bond markets. And so that roughly, over a 5-year time frame, that roughly equals about 300 billion per year. And that's a fairly large amount of issuance to go into one sector. I think for us, the way we think about it, it's a very interesting opportunity because at the end of the day, these are very high quality issuers. We're talking the likes of Google, Meta, Microsoft. These are companies that are going to be around for a very long time, insanely profitable as well. And so there's going to be a lot of opportunities for investors to place capital to work in this sector and generate very good income. And we're starting to see that already, right? So I mentioned 300 billion per year was needed to be funded by the corporate bond market to fund the AI investment boom. Just in the last 1 to 2 months, we've seen 100 billion of corporate bond issuance specifically to fund this artificial intelligence wave.
Yeah, wow.
And so to my mind, some of these numbers are probably undercooked. There's a lot of upside risk to these numbers. And I think as we kind of go through, more of this over the next 1 or 2 quarters, I wouldn't be surprised if these numbers are ratcheted upwards.
Yeah, it's nuts.